Hi, and welcome to this video on determining the volume to break even, net income given volume, and volume given profit. Meadow Inc. sells shoes for $126 each. The variable costs per shoe are $45, while the fixed costs per week are $6,723. There are three parts. Calculate the number of shoes that need to be sold every week to break even. And we need to round up the answer to the next whole number. Part B, if 64 shoes were sold, calculate the net income in a week. And we need to express the answer with a positive sign for profit or negative sign for loss, rounded to the nearest cent. And third, how many shoes must be sold to make a profit of $1,411 in a week? And we need to round up the answer to the next whole number. To work with this problem, we need to understand the role of various variables. Here we have that Meadow sells shoes for $126 each. Those $126 correspond to the selling price per unit. The selling price per unit is the amount a business charges its customers to buy a single unit of item produced. Selling price per unit is critical in calculating the revenue for the business. Next, we need to talk about variable costs per shoe. We have that variable costs per shoe are $45. Those $45 could come from the cost of materials, the cost of labor, or revenue-related costs such as sales commission, royalties, etc., that are necessary to produce one shoe. The total variable costs come from multiplying variable costs by the number of units that are produced and sold. So we take those $45, multiply them by Q, where Q is the number of units that are produced and sold. Next, we have fixed costs, or FC. Fixed costs are, according to the statement, $6,723. Fixed costs are costs that remain the same regardless of the number of items produced to sell. They are calculated for a specific time period, in this case per week, and are based on the production of a predetermined quantity of products for that period. Examples of fixed costs are administrative salaries, rent or lease of the facility, utility costs, insurance costs, property taxes, equipment rentals or depreciation, and marketing and advertising costs. Those are all considered to be fixed costs since any variation is infrequent, and the amount does not directly depend on the number of units produced. Okay, so let's talk about part A of this problem. We need to calculate the number of shoes that are needed to be sold every week. We need to find Q to break even. We need to find Q so that the net profit, or PFT, of the business is 0. When the number of units of the product produced and sold cover all the costs related to producing it, the business is set to break even. The point at which the total revenue or total sales is equal to total costs is known as the break-even point. So the break-even point, the profit or net income or loss is 0. So there is no profit made or loss incurred. Now, profit is something that defines the success of the business, and profit is determined by the following equation. We have profit equals the difference between the total revenue of the business, the total revenue earned, and the total costs incurred in the business. Now, total revenue in turn is the amount of money received or brought into the business from the sales of the items produced and sold during the period, in this case during the week. And the total revenue is calculated by multiplying the selling price per unit at which items are sold, in this case $126, by the number of units sold. In this case we have Q. So there we have the total revenue of the business. Now the total costs come from adding fixed costs and total variable costs. So we're adding $6,723, and the total variable costs are 45 times Q. Now to break even, we need profit to be zero. So we need total revenue to match the total costs. So we're forcing 126Q to be equal to 6,723 plus 45Q. And we need to find Q. We need to solve for Q. The Q we find is the number of shoes that need to be sold every week to break even. To solve for Q, we get to collect terms with Q in them. So we bring this 45Q over to the left. We have 126 minus 45, all of that times Q, equals 6,723. So we're saying that 81 times Q equals 6,723, or Q is the same as 6,723 divided by 81. When we perform that division, we find the whole number 83. So we're getting a whole number out of this calculation. There is no need to round up the answer. We have that this is the answer to part A. 83 shoes need to be sold every week to break even. Okay. Let's move on to part B of this problem. In part B of this problem, we are told that the number of shoes that were sold was 64. Let me wait here to get ready for part B. Okay. So the part B, they're telling us that Q is 64. And we need to calculate the net income in a week. In other words, we need to find profit or net profit in a week. Because 64 is less than 83 and 83 was the amount of shares that needed to be sold to break even, we expect a loss. So profit should be negative. Now remember that profit comes from subtracting two quantities. We do total revenue earned, take away total costs. The total revenue depends on the selling price per unit and the number of units sold. We have P times Q. In this case, we have 126 times 64. That multiplication gives us the number. Let's see, we have the number 8,064. While total costs are always given by the addition of two types of costs. We have fixed costs and we have total variable costs. Fixed costs are 6,723. And the total variable costs will be 45 times Q. And Q is 64, so we have 6,723 plus 45 times 64. And that is going to give us number 9,603. Then the net profit is given by the total revenue, $8,064, minus the total costs, 9,603, and we get a loss as we predicted, and that loss is going to be of minus 1,539 cents. Okay. In part B of this problem, we're given the number of shoes that are sold, and we compute the net income by using the formula total revenue earned minus total costs incurred in the business. Total revenue is P times Q. The total costs are fixed costs plus total variable costs. And there we have all this. The answer to part B is minus $1,539. So there is a loss of $1,539. Now let's move on to part C of this problem. In part C of this problem, we need to compute the number of shoes that must be sold to make a profit of $1,411. So we need to find Q. Part C, we need to find Q so that profit turns out to be $1,411. Okay, we're looking for Q, so we will get to solve for Q. And once again, we use a formula for profit. Remember that profit is total revenue earned, take away total costs incurred in the business. So we want to make total revenue minus total costs equal to $1,411. Now the total revenue depends on P and Q. We have the multiplication of the selling price per unit at which items are sold. In this case, shoes. We have 126 by the number of units sold. We don't know what Q is, so we just write Q. Well, the total costs come from adding two types of costs. We have fixed costs and we have total variable costs. Fixed costs are 6,723. The total variable costs are 45 times Q. So we want to make sure that 1,411 is equal to 126 Q, that's the total revenue earned, minus the total costs, and that's 6,723 plus 45 Q. And we're very careful here, we're using brackets to make sure that we end up with the right equation. 1,411 should be equal to 126 Q. Then the minus affects everybody in the bracket. We have minus 6,723, then minus 45 Q. Now we want to collect Q terms. Have 126 minus 45 Q. And on the other side, we have 1,411 plus 6,723. This should be equal to, there we have 126 take away 45, that gives us 81Q. So 81Q should be equal to, the addition of those numbers is 8,134. The Q should be equal to 8,134 divided by 81, and that's equal to 100.4197 and so on. We can approximate this answer and round up the answer to the next whole number, which is 101. 101 shoes must be sold to make a profit of $1,411 in a week. We expected this number to be larger than 83 because 83 was the break-even value, the number of shoes that needed to be sold to break even. And yeah, so that's the end of this problem. So we have been using the same formulas over and over again. The formula for profit is total revenue earned minus total costs incurred in the business. Total revenue is written as price at which items are sold by the number of units sold. Total costs come from adding fixed costs and total variable costs. Fixed costs are given and total variable costs correspond to variable costs times the number of units sold. For each part of this problem, we either got to solve for Q or we found the net revenue or net profit. Okay, thank you for watching. If you have questions, please write a comment and I will try to reply as soon as possible. Bye.